Why hot stocks are delivering massive returns in 2026. What every investor needs to know. Why you should get excited about hot stocks. Getting excited about hot stocks is one of the smartest and most rewarding shifts an investor can make, because these names deliver the kind of market action that turns capital into something alive and throbbing with possibility. When a stock catches fire, it does not drift upward in quiet increments. It builds intense pressure through a convergence of momentum, volume surges, and institutional conviction, then releases that energy in sustained thrusts that can multiply wealth faster than almost any other asset class. The excitement begins the moment the setup starts to form, because the investor who spots it early feels the unique thrill of sliding into position while the tension is still coiling tight, knowing that every subsequent earnings beat or volume spike will push the share price higher with growing force. This is not passive holding. It is active participation in the market's most dynamic moments, where real business progress meets surging demand and creates the kind of upward release that leaves portfolios pulsing with fresh gains. The first reason to get excited lies in the raw potential for explosive returns that hot stocks consistently demonstrate. Once momentum takes hold, price appreciation accelerates as each catalyst reinforces the next, sending the share price thrusting through resistance levels that once seemed distant. Historical patterns show this repeatedly. Tesla, for instance, rode the electric vehicle wave with production ramps and battery innovations that delivered delivery beats quarter after quarter, allowing the stock to swell with institutional money and break out on massive volume until early positions compounded into life-changing gains. Nvidia followed a similar path during the artificial intelligence boom, where chip demand exploded and earnings surprised to the upside again and again. The stock rode long, powerful legs higher as data center spending poured in deeper than anyone anticipated, creating triple-digit returns that rewarded those who recognized the heat early. Amazon, in its growth phase, built an e-commerce moat so wide that once the market grasped the scale, shares broke out decisively and delivered compounding appreciation that turned modest investments into substantial wealth. These examples are not anomalies. They illustrate how hot stocks convert fundamental progress into price action that throbs with sustained energy, often delivering returns that dwarf the broader market's steady but unremarkable drift. Beyond the numbers, hot stocks create genuine excitement through the psychology of discovery and timing. There is a special satisfaction in identifying the setup while upward pressure is still building quietly, before the wider crowd piles in and drives the final parabolic phase. Watching volume swell on up days while drying up on dips reveals that smart money is already positioned deep, and that quiet accumulation phase feels like being let in on a powerful secret. Technical signals add to the thrill. Price action teasing a golden cross between the 50-day and 200-day moving averages, RSI climbing above 60 with room left to run, and MACD lines crossing upward with expanding histogram all signal that the stock is coiling tighter and preparing for a strong breakout. When these indicators align with a clear catalyst, whether an upcoming product launch, regulatory tailwind, or accelerating revenue growth, the anticipation becomes almost electric. The investor who enters at this stage experiences the market at its most alive, feeling every subsequent higher high and higher low as personal validation that the thesis is playing out exactly as the pressure suggested it would. The financial mechanics behind hot stocks only deepen the excitement because they reward disciplined positioning with compounding growth that feels almost effortless once the move is underway. Entering when the stock begins to throb with potential allows capital to work harder than it ever could in slower moving names. Each earnings beat expands margins and justifies higher valuations, swelling the multiple and driving further price appreciation in a self-reinforcing cycle. Short interest above 10% of the float can add mechanical thrust through squeezes, where covering activity forces buying that has nothing to do with new fundamental news, yet still propels the share price higher with dramatic force. Proper position sizing and stop losses placed below recent support levels protect the downside during natural pullbacks, which often occur on lighter volume and serve as healthy breathing room rather than reversal signals. This risk-managed approach keeps the investor engaged for the full duration of the hot phase, allowing the long legs of the trend to carry the position towards substantial capital gains. The result is portfolio growth that outpaces inflation, beats benchmark indices, and creates a tangible sense of financial momentum, mirroring the stock's own upward energy. Hot stocks also excite because they sharpen every aspect of investing skill while delivering immediate feedback. Scanning charts for volume confirmation, studying institutional ownership trends, and tracking relative strength against the sector all become more engaging when the payoff is a name that suddenly pulses with breakout potential. The learning curve is steep, but rewarding. Understanding how sector rotation lifts leading names within a newly favored group, how accelerating revenue growth creates scarcity that the market cannot ignore, and how sentiment shifts from skepticism to euphoria once the breakout is confirmed. This active process turns investing from a passive allocation exercise into a dynamic pursuit where each new hot stock represents another opportunity to apply refined analysis and feel the market's rhythm in real time. The confidence gained from successfully riding one hot name carries forward, making subsequent setups easier to spot and more satisfying to capture. Over time, the investor develops an intuitive sense for when pressure is building, when volume is confirming conviction, and when the stock is ready to release its stored energy in a powerful advance. Another compelling reason to embrace the excitement is the way hot stocks transform ordinary market participation into something emotionally charged and motivating. There is an undeniable adrenaline rush that comes from watching a position pulse higher on increasing volume, knowing that the underlying business momentum is accelerating at the same time. Pullbacks, rather than causing anxiety, become opportunities to add at better levels or simply reaffirm conviction as support holds and the uptrend resumes. The broader portfolio benefits as these high-conviction names offset slower performers, smoothing overall returns while injecting periods of outsized growth. In taxable accounts, the preference for longer holding periods to qualify for favorable capital gains rates aligns naturally with the sustained nature of the hottest moves. In tax-advantaged retirement accounts, the full power of compounding can be harnessed without immediate drag, allowing gains to build upon gains until the portfolio itself begins to throb with expanded potential. This alignment between strategy and tax efficiency adds another layer of satisfaction, turning what could be dry financial planning into a more vibrant and purposeful activity. The market continually presents new hot stocks as economic conditions evolve, technologies advance, and consumer preferences shift, ensuring that the supply of exciting opportunities never truly dries up. Periods of easy liquidity and low interest rates tend to heat growth names more readily because capital flows freely toward future potential, amplifying the upward pressure. Even in more challenging environments, sector-specific catalysts can still create isolated pockets of intense heat where innovative companies break out and reward observant investors. Studying past cycles reinforces this truth. The stocks that became legends did so by building pressure beneath the surface until the market could no longer ignore the buildup. Recognizing the pattern early allows participation in the release, rather than chasing after the move has already exhausted its easiest gains. The excitement is not reckless speculation. It is informed enthusiasm backed by technical confirmation, fundamental progress, and disciplined risk management. Of course, the path to these rewards requires staying level-headed amid the very heat that makes the stocks so compelling. Volatility is part of the experience, with sharp intraday swings or multi-week consolidations testing patience. Yet this very volatility creates the setup for the next leg higher, and investors who remain focused on the underlying pressure rather than short-term noise, are the ones who capture the full upside. Diversification across several potential hot names, rather than concentrating everything in a single position, further reduces risk, while still allowing full exposure to the theme. Regular review of volume trends, momentum indicators, and earnings revisions keeps the thesis fresh and provides clear signals if the heat begins to dissipate. When managed this way, the excitement stays productive rather than emotional, leading to consistent outperformance over time. Ultimately, getting excited about hot stocks is about embracing the market's most vibrant expression of supply and demand at work. These names do not simply appreciate, they pulse, build, and release energy in ways that reward preparation, timing, and conviction, with returns capable of transforming financial futures. The investor who learns to recognize the early signs, catalyst, swelling volume, technical breakout, accelerating fundamentals, and sentiment shift, gains access to a level of portfolio growth that feels dynamic, purposeful, and deeply satisfying. Each new hot stock becomes another chapter in a larger story of compounding wealth and growing market mastery. The pressure builds, the setup aligns, and when the release comes, the gains arrive with a force that makes every other investment feel comparatively dull by comparison. This is why the excitement matters. It keeps the investor engaged, the portfolio thriving, and the process of wealth building as alive and compelling as the stocks themselves.